All right. So good evening to you all. All right. So we'll start very soon. It seems it's quite late, but we are going to start. So please, I urge you to share the link with your downlines, your team members, so that they can join us for us to start. Okay. All right. So share the link. Share the link. Let's switch at least now we are 39 numbers now. So let's share the link to hit at least 50 to 60. I mean, let's say 60 so that we start. Okay. I think by the time we start, a lot of people will join us. So share the link. I'm sure you cannot hear me, right? Can you all hear me? Okay, so I will need you to verify something for me. Quite unfortunate. Um, I've been in town and I visited the mall, so I thought my place will be a little bit disturbance, but yes, there is no excuse for why we wouldn't do anything. We usually have to give excuse for why we are doing something. So we usually do the meeting, okay? Right. So I'm sure my background is not disturbing you, right? Good. So please share the link. Okay, we are 53 numbers now. I'm sure you can all hear me loud and clear with no disturbance, right? I'm sure you can all hear me loud and clear with no disturbance, right? Very good. Okay. So share the link. Share the link with your downline so that we start. I've always been telling you one thing that these Zoom meetings and other that you've been doing. If you really want to grow in the business, the best way you can grow is to ensure that every single meeting you attend, you go with your downline. So someone say, please increase your volume. Or am I loud and clear on the line? Am I loud and clear on the line? Okay. All right. So please share the link with your downline so that they can join us for us to start. Okay. Share the link with your downline so that they can join us for us to start. Mind you, if you are growing alone, you are not yet building business. You are building a disaster. A great man once said something. He said, every business that you do alone, you are not making progress. But if you build a business with people, that is where the real progress begins. So anytime you have a business agenda, anytime you have a meeting like this, ensure that you are there with your downline. So wherever you find yourself, your downlines are also there. And that is when you can build a successful business. Okay. All right. So I think we've hit 60 and we're gonna start very soon. Right? Okay. So let me quickly share my screen for us to start. Okay, so let's start the game. Okay, so let's keep going. All right, so I'm sure you cannot see my screen now. Can you see my screen? Is my screen visible? Can you see my screen now? Is my screen visible? Okay, so let me know if my screen is visible. All right. Okay. Good. So I think we are free to go now. Now this evening we are going to have an interesting discussion on hedge mode, how to hedge your trade, the benefit of hedging your trade using royal fuel boats, and why it is important for you to understand hedge mode. Okay, so this evening, that is the dimension that you are going to take a look at. I want every trader to understand the concept of the hedge mode and then also the advantage of what the margin calls on the futures market and how you can strategize your money to make more profits in trading on the futures market. So quickly, we have our screen shared and we can open our board now for us to start our lesson. Okay, so I think those of you who joined yesterday's session, yesterday we discussed more on breakdown key concepts on how to um, get your leverage, your margin, your liquidation price, and other things in the futures market. So we also discussed a little bit about how to hedge your trade. So today we intend that we'll give a focus on how to use hedge mode, okay, and how hedge mode really works in the futures market on Royal Field. Okay, now one thing that you need to understand is that hedge mode is one of the advanced trading models when it comes to futures trading, and the big boys uses hedge mode for one particular thing. Now, this is one secret thing that a lot of people don't know, especially when you go into the forex market. Those big forex traders. The secret to for them to show people, especially those who give signals, those who sell signals. Sometimes, those times when we were beginners in the financial markets, I realized that someone will give a signal. Maybe they will give sell, and they will bring a signal that makes simply means they make wins in the market or they go on. Yet you realize that by and large, so the secret to empowering the futures market or the market is about what? Hedge mode. Okay, so a lot of traders begin to hedge their trades in order for them to do what? Make more profit. And this is the secret behind. Let's proceed with our board. Oh, let's come here. Okay, so let's clean what is here for us to go. Now, hedging. Okay, hedging, hedge, hedge. We said this is an advanced trading model or trading strategy when it comes to trading on the futures market. So when it comes to trading on the futures market, this is an advanced trading model. Now, how does this work? Briefly to every single trader, okay, to every single trader here, you should understand this concept very well. We said when we talk of hedge mode, it is the ability or a strategy which implies the trader to take advantage over the opposite market. That is briefly explanation of what of hedge mode. Is the ability for the trader to take advantage over the opposite market. Now we all know that whenever we are trading, we trade on two directions. Either we are on long direction of the market or we are on short direction of the market. So this means if you set up a trade, it's either you are winning on long or the market is going against you on short. If you are on short too, it's either you are winning on short. If you are not winning on short, it simply means the market is going against you, taking advantage over the long position. So when we talk of hedge mode is the ability for the trader to see opportunity in the market while the market is in reverse. So now you set up a trade. You set up a trade here. You are on long position. This is your long position. You are here. This is your long position. The market moves to this direction. Then it begins to do what? Reverse to this direction. What we are saying that let's assume your capital is $200. $200. Now this is where a lot of people begin to ask questions. Your capital is 200 what? $200. You are using $200 to trade. You are on long with $100. So out of the $200, you are not using all the $200 to trade. Mind you, you've done capital management in trading. You've done capital management in what? In trading. So you are using maybe $100. That is half of the money to trade on long position. You are using half of this money to trade on what? On long position. Right? Now, the market is against you or is going against your position, which is on long direction. Under normal circumstance, if the market is going against you, if you have what we call one-way mode, if you are using one-way mode, you only have to leave the trade in the market until it reverses back to hit your take profit. Until the market reverses back to hit your take profit. Now, whilst you are waiting for the market to hit back your take profit, there could be a possible decision or solution to your trade that you can also go on short. So when the person is using one-way mode, that person will not be able to take advantage over the market while the market is going on opposite direction. So the trader who is hedging the market or who is hedging his trade would be able to take advantage over the market to do what? To open another position on the other direction, which is short, with his remaining capital, either $50 or $100. Now, when this happens, listen to this. When this happens, if it happens that this position, since the market is going against you on long, if it happens that this position that is on short wins, at least let's assume your take profit on the long was 5%. And over here too, on the other position, your take profit too is what? Is 5%. Now, by the time this trade on the long position will close, or by the time this position that is on the long position will reverse, you would have made profits on the short position, on the short position with that 5%. So you realize that this is a smart move in the market because anytime we set up a trade, there are two things that happen. It's either the market goes against us or we win the market. Anytime you set up a trade, it's either the market is going against you or you win your trade. Before you even win the trade, the market can deeply go against you for some time before it does what? It reverses for you to make back your profit or win that particular trade. Are we making progress? Are we learning here? Are we learning? 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 Very good. Very good. You are following. Now we can proceed. So you see, whenever we talk about trading using hedge mode, it's a way we want flexibility in the market. That is the idea. We want what? Flexibility. Oh, thank you, my brother. We want an easy way to snatch the market and make profit before we will be endangered in the market. So I said, anytime you set up a trade, before you win the trade, before there is a win, the market surely goes what? Against the trader before. So anytime you set up a trade, you are on long or you are on short. Now, the market, the position that you open is on long position or on short position. This position is seriously going against you and we are not winning yet. You know, before you win, the market will surely dump or will go against you for some time before you do it. You win. In this case, we said, in order not for you to stress yourself in the market, open a position against the trade with another capital, with another what? Capital, which brings what we call flexibility, flexible trading. So we are talking about flexibility here. You need to have a flexible trading. And since we want flexible trading strategy, the best strategy we can go for is the what? Is the hedge mode. And that is the reason why I love Royal Field. Is the what? Is the hedge mode. So we are hedging our trade so that we can make profit on the other position before we make back our profit here or we hit back our target. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. Very good. Very good. Now, let's proceed. So the main idea behind the hedge is not because you are afraid of losses, but it's because you want flexibility in the what in the market. Listen, if you open up a trade, if you open up a trade, the trade does not win automatic. It goes against you before you win. True or false? If you open up a trade, it's not an automatic move. The market surely goes against your position before it reverses for you. You get the idea? So you want flexibility in the market. That is the reason why you are opening such what position. Now, just imagine. Let me use this as an opportunity to explain something to you. Just imagine you've been in the market for 2 weeks. Let me explain it. Just imagine you've been in the market for 2 weeks. Okay? You've been in the market for 2 weeks on one particular asset. This is what makes the hedge mode to be so different and then interesting about trading in the futures market. Just imagine you've been on a one particular asset for 2 weeks. Within these 2 weeks, this asset, assuming you bought the asset and it keeps dumping, it keeps dumping. This asset keeps dumping in what? In value. For the whole 2 weeks, it keeps dumping. This simply means those who are taking advantage over the dump are making profits. True or false? This simply means those who are taking advantage over the dump are making profits. True or false? True or false? This simply means those who are taking advantage over the dump are making profits. True or false? Right? That is the idea. Now, let's proceed. So if these people taking advantage over the dump are making profits, what we are saying is that if you are a futures trader, if you are trading on the futures market, your easiest and possible way of winning in such market, you are not losing the money that is in the market for 2 weeks. You are not losing this money. The idea is not because you are losing this money in the market for 2 weeks. The idea is that you are waiting for this market to rise back. But since you are waiting for the market to rise back, you still have possible opportunity to make profits on this asset that is dumping. Am I tapping in the medulla now? Am I tapping now? It is tapping. It is clicking. Is the idea of the head mode entering? It is entering. If it's entering, give me one in the chat. If it's entering, give me one in the chat. If it's entering, give me one in the chat. If the idea of the hedge mode is entering, give me one in the chat. If the idea of the hedge mode is entering, give me one in the chat. If the idea of the hedge mode is entering, give me one in the chat. If the idea of the hedge mode is entering, give me one in the chat. You see, so the idea of hedging your trade is for the trader to have flexibility in the market. Okay, the idea of hedging your trade is to enable the trader or to ensure the trader have flexibility in the market, flexibility and then profitability. Once you're having a flexible trade, you are enjoying what? Profit. Once you are having a flexible trade, you are also enjoying what? Profit. So this asset that has been in the market for 2 weeks, let's say it is on long, okay, and now the market is dumping. Let's assume this asset that has been in the market is on long position for 2 weeks, so for the whole 2 weeks, the market keeps dumping. So the trader that is on long on this same asset can short this trade, and you continue to have a consistent profit margin. So you'll be making what profit on the short position. You'll be making profit on the short position in the market. So you know the funny thing here or the amazing thing. Sometimes you continue to hedge your trade. By the time you realize, even the money that you use to open the position on the long, you use the short position to recover that money. That is your margin amount. You use the short position to cover that amount of money. Can't you see how interesting it is? You see, so sometimes the funny thing is that, or the interesting thing is that, by the time this trade will begin to rise back again, by the time these 2 weeks trade in the market will begin to rise back, for you to hit back your take profit or your take profit to be triggered, this short position would have given you amazing or abnormal profits in the market. This short position would have given you abnormal profit in the what? In the market. And it's vice versa. It's vice versa. Are we learning? Are we learning? Are we learning? If you are learning, give me one in the chat. If you are learning, give me one in the chat. If you are learning, give me one in the chat. If you are learning, give me one in the chat. If you are learning, give me one in the chat. If you are learning, give me one in the chat. If you are learning, give me one in the chat. If you are learning, give me one in the chat. Very good. Very good. You see, so the idea of getting to complain too much on the assets being in dump, you waiting and you don't know what to do will be less. You get it? So it's a strategic means of maximizing profit. It's a strategic means of what? Maximizing what? Profit. Now, if you know, we have the idea you open margin call. So you open margin calls on the trade, you hedge the two trades, you open margin calls in addition. Then just imagine what is going to happen. You open the trade, you have your margin calls, and you hedge your trade in addition. That is called abnormal profit. You know the power of margin calls already. So now, how do you hedge your trade? Okay, so the hedge strategy plus your margin call. So having your hedge strategy or your hedge mode in Royal Kill plus your margin calls. Having your hedge mode strategy in Royal Kill plus your margin call is equal to what? Abnormal profit. Is equal to what? Abnormal profit. Is equal to what? Abnormal profit. So you hedge your trade in the market, then you open more margin calls in addition. It's equal to what? Abnormal profit. So now you begin to trade. As the market goes against your position and there is a possible price reversal, you choose to do what? Hedge your trade, you open more margin calls, and you have your freedom. Are we learning? Are we learning? Are we learning? Now, let's go into our exchange or Royal Kill first. How do you hedge your trade? You see, how do you hedge your trade? How do you hedge your trade? So let's go to Royal Kill. Let's look at how you can hedge your trade. I have a very nice hedge trade right here. Let's get to work. Good. So now you come to Royal Kill. This is your Royal Kill. Okay. You come to Royal Kill. You come to Royal Kill here. Good. So this is the power of what? Of your margin calls. So the power of your margin calls, the trade keeps buying and it keeps what selling for you. This is the power of your margin calls. Now let's go to strategy. Okay, so strategy, good. Now this is another trade here. Now look at this trade. It's the same trade. Okay, it's the same one. The same trade. It's the same trade. This trade that we have here is the same one, the same trade, right? Good. Now let's look at it. So we have long here and we have short here. We have long position here and we have short position here, right? Good. Now this is a perfect example of what? Of hedging. This is a perfect example of what? Of hedging. This is a perfect example of hedging. So you've hedged your trade. You can realize that the long position is we have long position and a short position simultaneously. We have a long position and a short position simultaneously. Okay, we have a long position and a short position simultaneously. Now look at the first one, the unrealized profit of the first one, which is the long position, and then look at the unrealized profit of the second position, which is the short position, right? So in this case, when the assets keep dumping, now you can see that for some time now, Moodin was rising very fast, but the value keeps dropping for some minutes now. So the short position will continue to win while the long position would remain dormant in the market. Okay, so the short position will continue to win while the long position will be in the market, right? So now let's go into our exchange. Let's go to our exchange. Let's go into our exchange. So this is the first trade. That is the first trade here, and then this is the second trade here. Can you see it? This is the first trade. That is a long position, and this is a short position. I'm sure there is network issue here. There is network issue here. I'm sure there is network issue because in the exchange it's in profit, so it's supposed to be so. So it's a network issue. Okay, it's a network issue. Now looking at this trade, you can see that the long position, the market is against the long position, and we are winning in the what? In the short position. Even if the market could reverse, the short position could make better profit because presently the asset that is moving is dropping in what? In value. The price of moving is presently dropping in what? In value. Now let's look at another instance. So because this place we've already opened the position, I think um I have to refresh the account. Because we've already opened the position, I would like to go get into another account, different account. Let's use different accounts. Let's look at how you can hedge your trade. So over here, it has been hedged already. Let's use different accounts to look at how you can do it. You can hedge your trade. So now let's go to Royal Fuel. Sorry, let me log in with different accounts. Let me log in with different accounts. Let me log in with different accounts. So I'm coming a minute. Um, let me log in with different accounts. Okay, so let me get a different account. Okay. All right. Can you hear me? Am I loud and clear on the line? Am I loud and clear on the line now? Am I loud and clear? Am I loud and clear on the line now? Am I loud and clear? Good. All right. So we can proceed. We can do it. We can proceed. We can proceed. We can proceed. Okay. So now let's go to royal field. Okay. So let's go to strategy. Good. Now we have another trade here. Okay. We have another trade here. So this is SRP, right? This is SRP. This is what? This is SRP, right? Good. So this is the trade that we have. Now, if you want to trade, if you want to go on hedge mode, so we have they said would create a short strategy. Can you see? They said would create a short strategy. Hope you can see my screen. Is my screen visible? If my screen is visible, give me one in the chat. Is my screen visible? Is my screen visible? Very good. Very good. Now, this is your trade. Okay. This is your open position. Now, this is SRP, right? Good. So if I want to short SRP now, if I want to short SRP now, it's very simple. I have to click on this create a short strategy. Can you see? Create a short what? A short strategy. I have to click on it. Once I click on it, I can choose to click on activate because the same strategy that I've set for the long is existing. The same strategy that I've set for the long is what? It's existing. The same strategy that I've set for the long is existing. So I'll just have to come here, click on the plus. It simply means I want to add the next strategy to it. It simply means I want to do it. I want to add the next strategy to the trade. Do you understand? Do you understand? If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. Good. Now, so in this case, when I come here, when I come here, I just have to click on the plus sign, create a short strategy. So I click on it. If I click on it, mind you, the strategy has been created on the short market already. So all what I have to do is to click on activate. Is to click on what? Activate. So it's either you click on activate or you set up a new one. So let's see. You click on trade settings, manually create. Now, this is your strategy. Okay. In some instances, the short strategy, the long strategy is already working there. So I come here now. This is the minimum amount of SRP that I can enter here. So the price of SRP is around 2.3 now. The price of SRP now, this is the current price of SRP. That is 2.249. 2.24 what? 9. 2.24. 2.249. So let me use that. So I click on trade settings, manually create. Now I use my calculator. So 2.2490, right? 2.249 multiplied by 40, which is 89 USDT. If I want to use 89 USD, that is the value. So if I want to use 20 multiplied by 2, that is 44.98, which is equivalent to 50 USDT. So I come here, I enter the value here. That is 20 SRP. 20 SRP. So after entering this value, I check up everything. If everything is right, so let me see if I can have a strategy here. Good. So I have a strategy here. Now, after clicking on my strategy, everything is working. I click on save. I click on confirm. Now I click on activate. Now look at the trade here. After clicking on activate, everything is working perfectly. Can you see now? Everything is working what? Perfectly. Can you see? Everything is working perfectly. Do you get it? Everything is working perfectly. So now you realize that you've created two trades now. You've created two trades now. Do you get it? So meanwhile, I don't want to create a short hedge at the moment. So I would like to close this trade. So now you've understood how this works in the market, right? You've understood how the hedge mode works in the what in the market, right? So you just have to click on what? You just have to click on create or add a what is it? Create short strategy. You click on it, then you either click on activate or you click on trade settings to set up a trade. To set it nicely. After setting it up nicely, you click on what? Activate to activate the trade. Do you understand? If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. So you see, we are here for a simple business. Okay. We are here. So someone saying you are going too fast, slow and break it down. Okay. We are here for a simple what? A simple business. Okay. We are here for a simple business. We are here for a simple business. I'm not here to complicate things for you. I'm here for you to understand things loud, very clear, right? Now, we said we are discussing about hedge mode. We said we are discussing about what? Hedge mode. That is our discussion. We are discussing about hedge mode. We said when we talk of hedge mode gives the trader the ability, the opportunity for him to take advantage over the opposite direction of the market to make profits. Hedge mode gives the trader the opportunity to take advantage over the opposite direction of the market to make profit. This is the genesis of or this idea of the hedge mode. So if you want to trade, if you're a trader and you want to trade and you understood the concept of hedge mode, we all know that anytime you set up a trade, listen, anytime you set up a trade, it's possible that the market could go against your trade. And this thing is normal everywhere. It's normal everywhere. Before you make profit, the market will surely go against you. You don't know how long the market will go against you, but you know definitely you can come out from that market. You don't know how long the market will go against you, but you know definitely you can do it. You can come out from that one, that market. So what we are saying is that in an instance where you've seen that the direction of the market has changed or it's changing. So assuming you are on long position, I'm taking it slow now. I'm taking it slow now. So those who says I'm running fast with the lesson. I'm taking it slow now. I'm taking it slow now. So follow this after. Now you are on long on the market. Okay, this is your long position. So it simply when we say long, it simply means the market is rising. It simply means you predicted the rise of the market. When we say short, you predicted the fall of the what? Of the market. So the trader is on long. Now, after going on long, the price of the asset keeps dropping. It keeps what? Dropping in value. This simply means if it's dropping in value, it simply means those who are on long are losing the battle, while those who are on short are winning the battle. True or false? True or false? you are on long, the market is going against you. It simply means those who are on long are losing the battle, those who are on short are winning the battle. Very good. Very good. So what we are saying is that in this case, if the trader wants flexibility and want to make want to get what we call flexibility and profitability in the market, all those on the short position would be making profit or will be winning in the market, while those on the long position would be waiting in the market. That is the idea. So in this case, what we are saying is that the trader can make a possible decision by shorting the trade. That is, if you think the asset is jumping very well or it's rising very well, you can do what? You can short the trade, or based on the position you are on short, you can long the trade. Longing the trade simply means you will need another capital. Take pay attention to this aspect. When we say you are hedging the trade, it doesn't mean that you are using, if you are using $50 to trade, you are using the same $50 to go on long, the same $50 to go on short. No. But when you are hedging the trade, if you are using $50 to trade on long, it simply means you also need another capital to trade on short. That is what we are saying. That is what we are saying. So the trader goes on long, and now the market is going against him. He can come here to go on what? On short. So even if this long position will take a very long time before it's sold out of the market, it simply means the short position will be sorting you out. It simply means the short position will be sorting you out. It simply means the short position will be sorting you out. If you understand this aspect, give me one in the chat. If you understand this aspect, give me one in the chat. If you understand this aspect, give me one in the chat. If you understand this aspect, give me one in the chat. Very good. So when we say someone is hedging a trade, it simply means the person is going on opposite direction of the market. It simply means the trader is going on opposite direction of the market. That is what we mean by a trader is hedging. Now, this means if you are hedging the trade, that does not mean that you are losing the long position. But it simply means the long position is not triggering your take profit, or your take profit has not been triggered. So you are in a waiting mode, or you are in a waiting position now. So in that waiting process, something could happen on the short position. So something could what happen in the short position. That is what we are saying. So in this case, the trader don't need to waste much time than to figure out on taking a possible hedge, either longing the trade if it's on short, or shorting the trade if it's on what? On long. So until the price reverts back, the trader will continue to be in the market on the long, whilst he benefits on the short position. Whilst he benefits on the short position. And with this, you need capital to short. So I made mention of the fact that when we started, I made mention of the fact that if, let's assume, you are having $200 in the market, you are using $200 in the market. Now you can intend to use $50 or $100 on your long position. Whilst you are waiting, when the market goes against you intensively and you think there is an opportunity in the market, you could use the remaining $100 to go on what? On short. It's simple as ABC. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. All right. Now, this hedge that you are going to hedge the trade, you are not going to hedge the trade on different assets. Pay attention to this. You are not going to hedge the trade on different assets. You are going to hedge the trade on the same asset. Please listen. You are not going to hedge the trade on different assets, but on the same asset. So, example, let's assume, let's use one asset as an example. So, let me use Solana as an example. So, let's assume you are on long position. Okay, I've been talking about long for a quite time. So, let me use short. So, you are on short position. Okay, short position. So, Solana, this is the price of Solana. Maybe it's around 160 today. So you predicted the price of Solana to drop from 160 to maybe to drop in value. So dropping simply means you are on what? You are on short. Dropping in value simply means you are on short position. This is your direction. This is your what? Your direction in the market. Now, Solana couldn't drop from 160, but it rather took a price reversal from it took direction from 160 onwards, upward direction. So we said the trader can open another position on long. Now Solana keeps trading from 160 to 170, 170 to 180, 180 to 190. So while Solana keeps rising, the long position keeps giving you profit in the market. So it will be sold in the market for you, while the short position keeps remaining in the market. While the short position remains in the market, while the long position continues to give you profit, it's sold out of the market consistent for you. That is what we are saying. So it's the same asset. It's the same what? Asset. It's the same asset. If you understand, give me one in the chat. If you understand, give me one in the chat. Today, this evening, I would like to give you opportunity to ask questions solely on the hedge mode or hedge position or the hedge strategy. This evening, I'll give you opportunity to ask questions on the hedge for hedge strategy. So in this case, if you have money, you're not going to misuse the money. And the next thing is that you are also going to open margin calls on both. You can open margin calls on both positions, both the long and the short. You can open margin calls on both the long and the short. You can open margin calls on both the long and the what and the short. You can open margin calls on both the long position and the short position. Do you understand what we are saying? Do you understand? Do you understand what we are saying? Do you understand what we are saying? Now, the essence of margin calls in the market is to help you buy more. Listen, we all know this from the stock market. The essence of the margin call is to help you buy more of the same asset when the market is going against your position. So if you are on long and you open margin calls, it's going to help you throw up what we call the average price of the asset. So which yesterday that is what we discussed. We discussed on the average price of the position. In the same manner, if you open short and you also open margin calls on the trade, it will help you to fill up the gap. And mind you, the market could either rise or fall more. So if you are on short, it's possible that the market could rise more or it will fall more in value. So in all aspects of the market, margin call is important. In all aspects of the market, either you are on long position or short position, margin call is what is important. Do you understand? Do you understand? Do you understand? Do you understand? So someone set up a trade. Someone set up a trade, and the person was in the market. Say, ha, the market is going against me. The market is going, I don't know what to do. I don't know what to do. He said, go and open margin call. He said, I've opened margin call. So the market is going against me. So you see, now you come here, you have your solution. You have your solution. Go and hedge the trade. Have your peace of mind. For flexibility and profitability sake, go and hedge the trade. Have your peace of mind. Open margin calls. Hedge your trade. Have your peace of mind. Royal View is giving you the best options in the market for you to trade and feel free. Yes, so we will discuss on how to use the indicators too. So don't worry. This time around, our mission is to ensure you understand the concept of the futures market itself before we bring in all the other levels, be it indicators or smart money concepts or whatever you implement in getting signals. And of course, it can be used. It can be used. But like I said, we want everyone to understand the concept of the futures market very well before we bring in all the indicators, right? Good. So, guys, you know, if you are trading with clarity, with understanding, you know what you are doing in the market, always you feel free to trade. So there are some people, whenever they are trading, they'll keep complaining, the market is swallowing me. The market is swallowing me. I'm dead in the market. I'm dead in the market. I'm dead in the market. You stop complaining. Hmm? So you have the opportunity to hedge your trade. You get it? And that is the reason why trading on the futures market, I've been saying that using royal fuel is more advantageous as compared to doing manual trading. Do you get it? It's more advantageous because you can hedge your trade and open margin calls on the trade and so relax in the market. Of course, it's your trade. So someone is asking, can I close one trade and then consider it positive one? Of course. If the market is going in your favor and you think you want to close the other trade, it's your choice. No. Why should you trade on your exchange when you have the boat that is doing an amazing work for you? Why should you trade on your exchange? All this strategy that we are talking about can be found or can be seen on Royal Kill. All these strategies we are talking about can work for you on your Royal Kill. So those of you who joined yesterday's training session in the morning, I talk about what we call BSD. BSD. And we said when we talk of BSD, that is both strategy data, both strategy data. And BSD only works in your bot, not in your exchange. If the exchange is having BSD, like it will be secured for you to trade in your exchange and not in Royal Field. So you have the opportunity to take advantage of this Royal Field bot. That is the reason why you subscribe to use the bot. So both data strategy and with both data strategy or both strategy data, you have the opportunity to implement all the trading strategies like margin calls, like martingale strategy, like GCA, and all the trading strategies in the market. Do you understand? So you these strategies you wouldn't get margin calls in your exchange. It's a both data what both strategy data. All right. Okay. So now let me take some questions. Let me take some questions. Let me take some questions. So someone is asking, is there losses in futures trading with margin calls? And if so, when can someone lose money in futures trading using Royal Fuel? All right. Now, from the onset of our trading or our training, we've discussed on what is the meaning of futures trading. Okay. On the onset of futures, our training, we've discussed on what is the meaning of futures trading. And we've discussed that futures trading, the reason why the trader should expect a possible loss in futures trading is that the money or it is a contract. We said the futures trading is a contract trading. That is the reason why there is a loss in the futures trading because it's a contract trading. And so far as contract is concerned, once you lose the contract, you use your money to pay the contract. So I think if you want to understand the losses and the winning in the futures market, that should be on every Wednesday morning. Try to join our morning session. Okay. So if not, we have the YouTube. You can go on YouTube to watch all our trainings on the futures market introduction to futures trading for you to learn more on that. We've answered all those questions. All right. So let me give you some few minutes to answer your questions. If you have any question, you can raise your hand to ask your question, or you write your question in the chat box. So does liquidation occur when? Okay. So is there a manual to activate HCS or Bybit exchange for futures trading on Royal Field? Okay. So for us for HCS, I actually don't know unless I confirm. But Bybit, I know you can use Bybit to trade futures. Can use Bybit to trade futures. So you just have to do the API. Okay. You just have to do the API on Bybit. And when you do the API, you will see you just have to do the API on Bybit. You have to do the API on Bybit, and after doing the API on Bybit, you can do what? You can trade. So you see unit trading. Unit trading. So you have to also add unit trading to your trading on your API binding. And after using the unit trading, you'll be able to trade on the futures market on Royal Trade. All right. Can I trade on sports and futures at the same time? Yes, you can trade on sports and futures at the same time. You can trade on sports and futures at the same time. You can trade on sports and futures at the same time. You can open trade on sports and open and trade on futures at the same time. That is if you have the money to do so. Always mind you, we've discussed every Monday, we discuss about trade settles. On trade settles, leader Chris talk about money management. Eh? How to manage your money in the market. So if you have more money to trade on both futures and sports, why not? You can do. But if you don't have money to trade on both markets, measure one aspect of the market and focus on only one aspect. Okay. So let me see if there is any question in the chat box. I don't think there are any questions again. At this point, does one hedge at what point does one hedge a trade? So I think that yes, when the market is going against you, good. So thank you for the reply. So that is it. So can I trade on the spot? Okay. So when guiding us in how to set the futures trade on reactive, please try to be a bit slow. If possible, try to cycle when necessary. All right. So we'll take that into consideration on our next meeting. Okay. So please, I think it's late, already late, and we'll end our session here. If there is no question, if you have any question, okay, one hand is up. Let me unmute you. I will take only three questions for us to bring this event session to an end. So you've been asked your news, so please ask your question. Ask your question. Richard, you've been asked your news, so you can ask your question. Richard, this P. Richard, you've been asked your news, so you can ask your question. All right, maybe it's a mistake. Please show us on reality how to set the point. This event section is not on. It's not on how to set a point. Okay, we are not here to discuss on. We are here to discuss on how to hedge your trade. So if God permits, on our next session, if you want to know how to set a point, we've already done sessions on that. So you can go to YouTube and watch the videos. We share the YouTube link on the platform. We share the YouTube link on the platform. So if not, go to YouTube and watch the videos. You've done lessons on that. If not, every Wednesday morning, you can join us every morning to learn on how to set up a trade on the futures market. So how can I lose money while using margin calls, and how can I get liquidated? All right, I think we've explained all these aspects. So we said, how can I lose? How can I get liquidated? We said you only get liquidated when your liquidation price. Yesterday we discussed about how to calculate for your liquidation price. So we said you only get liquidated in the futures market when your liquidation price, when the market, or when your liquidation price gets triggered. Okay, when your liquidation price gets triggered in the market, that is when we say someone has been what, liquidated. Every single trade that you set, there is a liquidation value. Liquidation what? Value. And that value that is given, when the price exceeds, based on the value that has been given, that is when we say that the trader has been what? Liquidated. So I think on every Monday we discuss more on liquidation. So please, I urge you, or sorry, on every Wednesday morning we discuss on trade settings, liquidation, and leveraging. So try your best, get the YouTube link and watch the videos on the YouTube. Yeah. Okay. Understood. But now, setting the trade using the strategies is where you need to guide us. All right. So I think that one will be handled in our next session. Okay. So this evening is purposely on how to hedge a trade and the advantage, the concept of hedging a trade. Okay. This evening session is solely on how to hedge a trade and the purpose of hedging a trade. So when are you going to start allowing this class to start trading on the futures? Okay, we will start very soon. No worry. We'll start. So is liquidation possible using MACD? Someone is asking. Yes, liquidation is always possible. Even if you use every on S strategy, so when there is a need for you to be liquidated, that is when there is a need. Okay, when there is a need, because mind you that we trade in an unstable market. We trade in an unstable market. So despite the fact you use MACD, you use RSI in all your trade setup on the spot market, yet you still get into floating loss. That is it. That should tell you that always as a trader you should understand the uncertainties that happens in the market. You should understand the uncertainties that also happens what in the market. So don't worry. Okay. All right. So I think there is no other hand up. And so please, when do you have your classes? Yes, so the classes is on Monday, sorry, Wednesday. Wednesday, okay, 9 o'clock East African time, and then is it 7 o'clock? Sorry, Wednesday, 10 o'clock East African time, and then also 7 o'clock Ghana time. 10 o'clock East African time, and then 7 o'clock Ghana time. That is GMT, Greenwich Meridian time. So 7 o'clock Greenwich Meridian time, and then also 10 o'clock East African time. So take notice of that. All right. So I think this is where we will end this evening session. If there is no question to ask, if God permits, we'll still meet again. And I urge you to go to YouTube and watch all the videos. Okay, Amos. Amos, okay. All right. You've been asked on mute. Ask your question. You've been asked on mute, so ask your question.
Yes, good evening, coach.
Good evening.
Yeah, I joined the meeting late, but I have no question, but I wanted to request you to put the video in the YouTube channel.
All right. So it will be dropped on the list for you. We'll drop it.
Okay, thank you.
You're welcome. All right. So let me see. Okay. So I think that is all for this evening. It's already late. I think it's 10:31 p.m. East Africa, and then also 7:32 Ghana time. It's 7:30 in Ghana and 10:32 in Uganda. You can write. And then also I think 8:30 Nigeria. Nigerian time. So if God permits, tomorrow you will still meet. Sorry, Wednesday we will still meet again. But I still urge for you to go to YouTube and watch all the sessions that we've discussed on the futures trading, and it will help you. You'll be enlightened more and understand the concept of trading on the futures market using Royal Trade. You really enjoy it, right? You really enjoy it, and you're putting better preparations in place that you get all the signal that you need to get to, to trade on the futures market. So exercise patience and get the knowledge first. Get the knowledge first. I always say that the knowledge you have is relative to the money that you do or you can make. So the money you make is according to the knowledge you do or you have. So always ensure that you are learning. So try your possible best to engage yourself in learning and understanding everything first before you begin to put everything into action or practice. All right, so go to YouTube and watch all the videos that you've done so far on the futures trading for you to get the concept clear. If God permits, next week Wednesday we'll still meet again. I wish you all the best. See you later. Bye bye bye. Have a wonderful good night. And sound sleep. Love you all.